All right. Good morning, everybody. This is Blake Morrow, and I'm not sure where Dale's at this morning. He hasn't responded. Look, I Dale and I, for 7 months out of the year, at least, we are in the same time zone. And when you get up at 3 or 4 a.m., during those hours, it's I have to give him a little slack because I've missed my alarm before, and it just happens. Um, Richard said, or Brand says, I wake up at 1 a.m. Good for you. That's crazy. I can't do it. I've been doing it for a long time. I've been getting up at like the 3 or 4 o'clock hour for well over a decade now, since I moved from Dallas, Texas, where it was, a little bit different. But I'll tell you, it's tough. It's fun. There's some definite positives about being on the West Coast or trading West Coast times in the United States, but there are those drawbacks if you're not a morning person. But I have to give Dale a little bit of leeway because sometimes it just happens when you miss the alarm. So hopefully we'll hear from him a little bit later today. I'm sure we will. I'm not really too worried about it. Now, before I get started and talking about the really actually slow price action overnight.
I'm here, Blake.
Oh, Dale, you made it.
My apologies.
Oh, no need to apologize. I was just telling the everybody that sometimes it just happens.
I heard the alarm and I just rolled back over, waiting for the snooze.
Hey, you know what? Why don't you do this? You have an interview. Why don't you go get yourself some coffee?
How do I sound in the morning?
You sound like you just woke up. So why don't you go shake the cobwebs off? Come join us in about 10 or 15 minutes. All right.
All right, buddy.
All right, man.
Thank you. All right.
You're welcome. All right. Like I said, I know that happens.
You're never this nice to me when I fail to wake up.
That's because you're a slacker. So good morning. No, I was going to say, before I get into, like the markets, I just want to say it has been a very slow market, but what we are seeing, and this is kind of like, let's start. It's kicked off with the Kiwi. I mean, the RBNZ, they actually raised rates by a quarter basis point last night, and a lot of people were thinking they might go half. But I told everybody, well, at least the ForexAnalytix subscribers during the F.A.C.E webinar, I was long, or during the morning edge, excuse me, I was long the New Zealand yen yesterday, and I'm short Aussie New Zealand too, but I was long New Zealand yen, playing it, from down here around the 77 level. And I got out of it just as we were hitting the 200-day moving average, because I wanted to book some profits. It's obviously a lot stronger this morning, but I warned everybody, hey, if they have a rate hike and it's only a quarter basis point, if it's a bullish or if it's a hawkish hike, then, it's going to rip higher. And even on the quarter, when the news came out, the news broke, and it was a quarter point hike, the Kiwi didn't even flinch. I mean, it actually went higher, and I was like, oh no, if you're short, I was thinking this, I'm long, so I was happy with it, but I was happy with the price action. But one thing that I was thinking is, if there's a quarter point hike, that's the first thing that people are going to hear. It's like quarter point. I was thinking, oh, the Kiwi is going to drop a little bit. And then, if it's a hawkish hike and you get some hawkish commentary, then they're going to just spike it right back up again. And I got to go back to that here in a second. And so I was like, oh my God, if anybody's short the Kiwi, they are going to be in a world of hurt. And, lo and behold, as soon as some of that hawkish commentary came out, I mean, literally the Kiwi just went whoop, whoop, and it went straight up, and it's been, climbing. But the reason why I point all this out is because I tried to short some Aussie yesterday, Because and I'll tell you what I did. I was playing the Euro Aussie on the long side right here at this confluence. We had this trend line, 618, 78% retracement. I'm like, okay, well, I'll give it a whirl right there. So I picked up the Euro Aussie. I got stopped out overnight, and I got to say this about the Aussie and the Kiwi, the Canadian, the peso, the rand. Let's not ignore that these commodity currencies have held up extremely well in the face of risk aversion. So think about that. These commodity currencies has held up extremely well in the face of risk aversion. What happens when you get risk on and stocks start to bounce? What do you think is going to happen with these commodity currencies that you're seeing here? They might come out of their shoes. Remember, we're dealing in an inflationary environment. So in an inflationary environment, and you got the outperformers right now are the Kiwi, the Aussie, the Canadian, emerging market currencies. I'm short dollar max. Look at this thing absolutely just crap the bed right now. It is absolutely just falling out of bed right now. Broke the 200-day moving average, horizontal support. I'm gonna say if the equity markets get a bounce here, and you guys should know, or at least have an idea that I'm more in a range. I think that the S&P is stuck between 42, 4,300 and 4,700 for now, near term or over the next couple of weeks. If the S&P starts to bounce here, back in the upper end of this range, these commodity currencies are absolutely going to fly. So I wanted to throw that out there this morning so you guys have something to chew on, because be careful if you're shorting like Aussie dollars or Kiwi dollars right now. These things have completely shown false breakdowns and reversals on a longer term basis. And if you start thinking about, like, let's go just to the Aussie, because the Aussie is the real significant one at holding the 70-cent level. We start getting about above these areas. I start looking at, we start getting above like 73, 74 cents. I mean, we're going to trade back up towards 80 cents without much of an issue. And they are fighting despite risk off. I mean, the S&P's gone from 4,700 to 4,300 and nothing, not much. Anyway, just need to throw that out there. Want everybody to chew on that for a bit, especially if you're I've got one last piece of the, I've actually still playing a little bit of commodity currency short against one cross. And that's just because I hope crude oil, will finally take a little bit of a spill following this Russia-Ukraine situation. But, crude oil still trading above 90 bucks. So it definitely doesn't feel good. So anyway, just a few thoughts on those commodity currencies. Good morning. I think we got K-Man here. Yep. We got Dale. Hey guys. K-Man, I know you and I have been playing the Kiwi to the upside. Congratulations on the Aussie New Zealand short. I think it's been a great trade. How do you feel about that commodity talk I was just mentioning? I mean, I
can only agree.
Okay.
I've mentioned in the chat a couple of times that during this crisis, or let's call it a crisis, a mini crisis, or however you want to call it, the Ukrainian,
the Russia situation, right?
And the Russian situation, already commodity currencies were holding up well because of the commodities being high, but also if you can't really buy much else, and Aussie and Kiwi were still far away from the real action, and they were already holding up. But now we are seeing as well with the RBNZ hiking. Don't forget, RBA is next week, and they have been slowly but gradually changing their wording last time. I think both still could have legs to the upside. I closed my Aussie Kiwi short because RBA next week. if there might be some speculation into next week that drives Aussie higher versus X, but could also just mean that Aussie Kiwi is holding here, right? But I'm long Aussie dollar, I'm long Kiwi dollar. I was long Kiwi yen, but I didn't write it as long as you did. But it's still holding very, very well.
Yeah, I'm just trying to buy dips, and I can't even get a dip in it. I mean, I'm hoping for a dip back, but shoot,
there wasn't any. The biggest dip we saw in Kiwi this morning was what, 10 pips from the high, and now we are already back above 68. The figure Aussies testing the resistance Aussie dollar as we speak. I think both will do well, and you were absolutely right in saying about emerging currencies as well, how well they held in a risk-off environment. Dollar.
I mean, look at the dollar max; it is getting smashed, and and by the way, I'm targeting 20 and possibly
I think
lower.
so.
I mean, the dollar max can go back and revisit 1980 without any issue. I mean, you think technically we can get 161% extension out of it. We're just going to be back to the base that we created back in 2021.
Yeah.
I mean,
there's a couple of conditions I would say for it to happen, but to be perfectly honest, while everything was getting set up, I also sold a very small dollar max again because it's just feeling weak.
Oh, it's been trading like a pice of garbage for literally like the last week, and it's taken patience. I mean, I've been sitting in it. I literally have been sitting short dollar max for I don't know, a week now, and it has been, and you and I've been trading it together actually in the chat rooms.
Yeah.
And when I've been shorting it, it's been kind of frustrating because it's just been kind of hovering around, and it hasn't really gone anywhere, but it looks like it's breaking today. I mean, it is taking cues from the Aussie and the Kiwi and maybe some of the Canadian right now too. So anyway, well, thanks for your.
Canada, I'm a little less convinced that Canada is going stronger right now because I don't know whether oil is going to really hold up, right?
We're the what?
I'm a little less convinced about the Canada right now. I don't have any positions in Canada. I'm usually a Canada deep buyer. But right now I'm not so sure. The 126.5 is strong in North Canada, and oil I'm not sure it's going to be able to really hold up. I'm with you. I think crude oil is going to eventually come down a little bit here. I think we've gotten pretty close to the $100 level. So I think crude's going to come off. And that's why there are some Canadian or some crude oil plays that I want to be involved in. And so that's why this my skepticism as well. So anyway, we'll see what happens here. But I'm just I'll just reference crude. I think crude, as we've gotten so close to 100, we're in this really strong. You can see this really strong ascending channel. 100, it would be the 161% extension. But there's a few times in this world where horseshoes and hand grenades, close matters. Technical analysis you can throw into that bucket too. I mean, when we get so close to 100, we might be a couple of bucks off, but that's you could argue, shoot, we've been there. You know what I mean? So that's just just my opinion. Brent yesterday hit 99, but couldn't really go to 100. I don't know. Have we missed the boat up there? I'm not sure. But the oil producing countries are still not saying that they will up their production or output. But I've got in mind that if we ever would shoot above 100 towards 110 on a quick run, that they might open the taps all of a sudden and then oil loses $20 in very quick order. That's my opinion.
I wouldn't want to be long up here personally,
No.
and that's that. I don't have a position, but Stelios, you've been kind of quiet. I know I cut you off a little bit earlier,
Yeah, you did.
which was intentional.
I
and I think Dale might actually be back here too. So Dale, did you get a cup of coffee?
Yes, I've had a half.
Awesome. Well, welcome back. So Crude or Stel, what are you thinking here?
I think, first of all, I agree with what you said about commodity currencies and the Kiwi in particular. You nailed it yesterday. You did say you thought there was going to be, on the morning edge, you did say that you thought there was going to be a hike and it's going to be a hawkish hike, and the Kiwi is outperforming. Now, you're right that they are performing well. My only worry is that I think that we're still in sell the rally mode. So I still think risk is going to get sold. And these rallies that we're seeing are going to get sold. So,
but the question is, where do they sell the rally? Like and I'm going to point out the S&P really quick. And you can see the chart right here, just so everybody else kind of has a reference. I mean, if you think that just since the beginning of the year, we've kind of just developed a new trading range in the markets. I mean, the upper end of the range is quite far from here. I mean, if you look at the S&P from current levels, I mean, we could go up another 5-6% before we get to the upper end of the range. So, do you think we go that far, Stelios, or?
What was I looking at? I was looking at, what was it, 44.50 or something like that. I have to look at my chart again. I think we could go another 100 points, but if we do break, what was it? Was it that 61 point? Yeah, 44.60 or something like that. If we do break above there, which means that we're going to be breaking above the 200 moving average on that 4 hour, then I think then it could be trouble for shorts. But I think anywhere around there, 44.50, 44.60 is the level where I'll be looking to try and fade this. Obviously, it could happen earlier because you know how it works with tape bombs and headlines. But I still think we're firmly in sell the rally mode. And also look at yields. 10-year US is creeping towards 2% again.
That was the point I made on the week ahead video. Because on the week ahead video, if you guys don't watch those, I take some time trying to figure out, obviously what's going to happen in the following week and kind of like the setups. And last weekend, I was like, okay, here's the master plan. I thought Russia was not going to invade Ukraine. They have, I guess you can call that an invasion. They walked over there to certain, areas. But anyway, I thought that the market would kind of feel the, buy the rumor, sell the news. So then, or it was going to get resolved and stocks were going to bounce. Basically, what I wanted to say is stocks were going to bounce, and what yields were going to do is bounce as a result. So you get a bounce in yields and stocks kind of recover. But my feeling, Stelios, is that when yields reach a new high, so this is the 10-year. So and by the way, we are referencing the 10-year. Let's continue to think that the yield curve is continuing to flatten too, right? So you look at the 10-year yields rising above the 30-year this morning, but you get a little bit overreach in the 10-year yield. When that happens, that's when the market goes, oh, wait a second. I was all focused on Russia and Ukraine and crude oil and all this other stuff. And, I forgot that yields are way up here, and that's not a good thing, right? So maybe stocks actually come under pressure once yields hit new highs. What are your thoughts, Stel?
Yes, is the answer. Okay. So when we hit new highs, definitely not good for risk. I mean, obviously anything can happen, but I think it's high probability scenario that we take another turn lower. And remember, this market is conditioned for years and years to buy dips. So at some point, this is going to become more and more difficult to buy dips, simply because everybody is going to be thinking that this is a way to do it, and then there's going to be more stops, and that's going to just push things lower. So I think if we do see higher highs in yields, definitely lower in risk. I mean, I think that's a very, very high probability scenario.
Yeah. All right. Hold on really quick. I'm jumping in the trades room and in the chat room.
And so the other thing,
where's Steve when you need him, huh?
Well, yeah, this just so you guys can see the trade room. This, like you can see last night, I was like, oh, here, I'll just give you guys kind of a little update. Like I was stopped out at the Euro Aussie overnight. Put that.
I'm here, room. Dale. You were asking for me.
And so this is the example of the chat room. And let me mention this. This is the chat room where you guys get, if you join the trader funding program, you get ForexAnalytix for free for a certain period of time while you're going through the assessment period. So it's called Trader Funding Program. You also have the, ForexAnalytix. If you try out ForexAnalytix and it's only $1 for 10 days, you can try it out and also get the chat room while you're doing that and, download the mobile app and all that fun stuff. So just needed to mention that before Steve comes in. Good morning, Steve. How are you? And Dale, I know Dale was asking for Steve. So,
it's a man crush we have here.
It's a what?
I missed that. What's that word?
Man crush.
Oh,
yeah.
Oh.
It's his Greek accent. Don't worry.
He's got a man crush. I would never admit that to anybody in my life, but I have a man crush on anybody.
Yeah, but Dale, after 175 years, has come to terms with his
ego.
Yeah, exactly.
Or his manliness.
Exactly.
I came out.
When you're man enough, you're not worried about stuff like that.
I have that FU money, so I don't care what anyone thinks.
There it is. Okay, now that we've got completely off topic, so Dale, I know you're kind of, you got up a little later than normal. Do you see anything that really sticks out? I mean, one of the things that I'm also looking at is gold won't back away either. I mean, look at gold. It's, it's firm. I mean, we're back above 1900. And it's kind of one of those things that I said yesterday. I said it via Twitter. I'm like, man, I just don't feel very comfortable about shorting risk or getting long risk every time I see gold spiking back up here. Anyway.
I started following the ruble going into this, and if you pull up a daily, it made a new high in the for the last several months and did not confirm, and looks like a second drive here where it could pull back and then one more drive, which is kind of telling me that the ruble is trying to stage a major bottom and US dollar ruble stage a major top. I don't know what implications that has geopolitically on what's happening in Ukraine, but I'm sure a lot of people are bearish because, the pipeline, how Putin financially might have some problems and maybe confidence. But to me, it looks like we're setting up for maybe an important high in US dollar ruble in the coming weeks. So that's something I'm monitoring, and I was with Helene. You've interviewed Helene, and she had an uptrend line in WTI that did not get taken out yesterday yet, and I don't know, it might be threatening.
Yeah, she's probably looking at something very similar to this, and if you look at like the channel, and this is minus the negative spike. This is off of basically the, I believe, continuous contract.
I think she's looking at your shorter term channel that you have in the red dots that we were kind of threatening last week. If you put it against that low, it wouldn't be parallel. But she has that uptrend line there in WTI, and she's saying that I asked her yesterday when we were coming off, and she said that it hadn't broken it, so it hasn't broken it. She said, but oil shares were weaker. So the oil shares have really lagged the whole commodity move.
Yeah, they have. So, and look, if I always fancy myself not the best crude trader out there, so I try to trade crude oil sparingly, because if I had to go back and look at all of my trades over the last 20 some odd years, I would say my crude oil success rate is not the best, right? And I know that. I mean, it's important when you're a trader and you understand what you are good and not good at. And, crude oil is one of those things that I'm better at calling it than actually trading it. But I would say if I was tempted to trade it, it'd be on the short side up here. If I was going to do it, if I was going to fight that trend, I'd try to trade it short, maybe up at new highs, maybe closer to 100. So anyway, just a little heads up. Thanks for your comments there, Dale. We got about 5 minutes. Steve Stelios, Steve, you haven't said much. Do you have any opinions about what's happening with Russia? I mean, does Putin stick his foot further into Ukraine territory, or what do you think?
Likely, slowly. I don't think he would want to push it and make it like extreme. You know what I mean?
Did you just meow at me?
Not exactly me, but
it's his wife.
Man, it must be
that was my wife. Yeah.
I know you got a man crush on Dale, but when you start meowing at me, that's
you know how it is.
I love Tom Jones. What's new, pussycat?
All right, sorry, Steve. Go ahead. Please finish your thoughts.
Some things you can't control; they just come out.
Hi, Steve. Yeah, well, let's talk a little bit about Russia. All right, so what?
That was my erotic calling. Sorry, Blake.
No. Go ahead.
So I don't think he's going to be challenged, really. But on the other hand, I don't think he wants to be, really violent about it. I think he wants to take it step by step. As I've said before, Russia and China have a long-term plan, right? So don't be surprised if Putin's idea of annexation of some of the old Soviet Union grounds is a very long-term process, right? I don't think he's going to push his luck to, in essence, force a reaction that Western countries don't want to go into. I think he's going to do it step by step. And perhaps, these two territories might be it for now. And then after a few years pass, might be another two. You know what I mean?
Yeah.
Steve, if I can just add a little thing about what you said about China, I think it's important for the diaries is that next week they're holding their 2 sessions in China. Where it's economy and strategy, and they discuss a lot of things. Their businesses, economics, and things like that. And that's next week. This to be held on the 5th of March. And it might be very interesting to hear what they have to say, possibly about this Ukrainian situation or Russian situation. So
I think that there is an under-the-table, mutually beneficial type of deal/tolerance between the two countries. So no matter what China says about it, because sometimes, they say totally different things than what they actually do. That's why I always like to judge people, governments, or whatever type of entity by their actions and not by what they say, right? I think it's extremely unlikely that China is going to do anything to stand, against or in front of whatever Putin and Russia is doing at the moment.
No. I'm looking at $CNH, and $CNH is actually lower by 0.5% since the Russian situation started. And I've got the impression some of the Russian cash is flowing into China, and that should not be a big surprise.
Might be the case, but don't forget that if we zoom out, after posting a double top at almost at 720, the USD CNH has been in a rather prolonged downtrend, right? We have been in essence in a downtrend since the very, very early summer of 2020. So it's already 1.5 years. And technically speaking, if you look at it, it doesn't show any signs that we're about to reverse higher anytime soon.
No, but I was just pointing that out. It was relatively quiet in this zone, but then it lost 0.5% since Russia started to.
Yeah. It was consolidating its losses, and it seems to be accelerating to the downside once again. I totally agree with you.
Yeah, I mean that is a hell of a breakdown. I mean, just a real big move lower.
And fundamentally speaking, I don't see the argument of why somebody would expect this to reverse anytime soon, Blake.
Yeah. Well, hey, look, we got just a few. Well, we have actually Dale's coming in here because he's got an interview. I just have to mention, hey guys, if you haven't checked out the Trader Funding Program, make sure you do so. I put the link in the chat box. Also, if you guys are not visiting tradersummit.net, I'm going to put this link in the chat box too. We have an interview coming out in literally about whoops, here, let me put it. I put it in the wrong chat here. Sorry. There we go. We have an interview coming out with Eric Bosmajian that'll be released here in probably the next 15 minutes or so. And it's interesting because I talked to him about like, hey, when the whole Russia-Ukraine situation, when people are not focused on it, what are they going to be focused on now? And he goes through a lot of the macro backdrops of what we're dealing with here in the US. And it really hits home with what Stelios was mentioning earlier about selling rallies in the market. And I think you guys got to watch that interview. It'll come up in just probably, like I said, in the next 15, 30 minutes or so. I saw the guys talking about releasing it. So really good interviews there.
He's excellent.
And yeah, so check it out if you guys get a chance. It's free. And then also the Trader Funding Program. All right, Dale, I'm glad that you made it this morning. I was a little worried. I always get worried like, oh man, hopefully he's not sick or something. So good to see you back. K-Man, Stelios,
thank you for being my alarm clock, bro.
Dale has already outlived our ancestors, and he's probably going to outlive our children as well.
Yeah, that's probably true. So hey, thanks everybody. Have a great interview, Dale, and thanks everybody for joining us today. I'll see the ForexAnalytix subscribers. I'll see you guys in 45 minutes on the Morning Edge as we go through all of these instruments as we do every day. All right,
thanks for covering for me. We're like the NFL guys, next man up. So thank you, Blake and team, and welcome back to F.A.C.E, Francis. I always look forward to hearing and seeing what's on your radar. Welcome back.
Hi, Dale. How are you? I hope you can hear me here.
I got you now, Francis. You want to share your screen? The little green button there. And really, just in case you had some charts or want to show your website, what an interesting time we're in here, Francis. So that's you want to show your video. So
I do indeed. Can you guys hear me? Can you give me a?
I can hear you, and I'm going to make you so that you could do it.
Francis, you've switched on your camera. I don't know if that's intentional. Yeah. Okay.
Yes, I have.
Okay, there you go.
External webcam, and now I'll just use the one on the laptop because I can't seem to find the setting. How are you guys?
Okay.
Good morning.
Great, buddy.
Sunny Panama, by the way, watching your supply chain bottleneck there with all the boats out in the water, racking and stacking and trying to squeeze their way through from the Pacific to the Atlantic.
What are you doing down there? A little R&R, Francis?
A little bit of everything. We like to work from all over around the world. A little bit of in checking on our business is actually incorporated here for some fairly obvious reasons, I think, and that it's beneficial. And I'm very happy to be with the trading community. And thank you for having me back on.
Oh, it's great to have you. Did you guys kick Noriega off your board on your businesses?
We're thinking of that El Salvador guy that keeps poking fun at Trudeau. We think he could be a fun board member to have. So we might be bringing him on. I think I can't quite get the name out right, but we're stalking him as a potential chairperson, maybe.
Yeah.
What a time in the markets, though, Dale.
Yeah, I wanted to, so headline driven, Francis, right now. Very hard for me and maybe for others to be a position trader when you'll have big moves your way and a headline will come and it'll whip and take it away from you. I've been saying that in these markets that it's never been more important to take partial profits during this type of scenario where intraday the swings in indexes and currencies, the market giveth and taketh away on any movement of a tank. So okay, you want to talk about Kathy? All right.
I've actually got a few things. Yeah.
All right.
Happens to be the one that we're on. I've just found that it's a bit like a crypto or Bitcoin. Kathy is the high beta out of season, and unfortunately, in our view, we still have opinions for further downside, and we're grabbing puts, and it is rolling over again. And I just thought. You guys are equity guys, you guys are FX guys. The truth of the matter, if we can come back to ARK in a minute, I almost think the chart that I want to most highlight, that is the macro elements, is debt markets and the currencies. And I think this, just to your question, a lot of people are finding, well, it's all very headline driven and all of that. We trade technically, and the structures that have held from the beginning are still holding. I'm actually prefer to go almost fundamentally, completely agnostic. In other words, ostrich head in the ground in terms of the hype and fundamentals. I'll come back again to this yield chart just on that very point, because you were talking about, I was listening to the guys chatting. I was a couple of minutes early and just getting a feel for the conversation so that I can tap in. Nice to see Blake and Stelios and the other guys and hear their opinions. It's always interesting to hear other traders, fellow traders, as I refer to them, talk. And the ruble came up, of course, because of the headline.
I brought it up.
And one of the key things about that, we've been all over the ruble long before the headlines. Get the news before the news by having, get our handsome faces out the way there, by having the charts here. This has been in a structure for an extended period. These guys have been baking this event that we are now facing, whatever form it takes. And we can all sit here and speculate, but I don't think any of us is ever going to know. And I don't think we'll ever work it out before they will. And even if we work it out, the market might choose to interpret it differently. So I just don't spend too much time actually trying to go, oh, are they invading? Are they not invading? This was your trade.
Just trade the charts, right, Francis?
100%. And this was your setup that we'd been talking about in our premium community for an extended period. We've had guys long the USD ruble for quite a bit now. And you can see that is the pinch. I'm hoping those annotations are showing. I'm putting them in my transgender pink there so that everyone can realize how modern a man I am. And you've got your third high over there. You've got a tight squeeze. That is basically your stop, the green for go, the red for have your stop loss. And we're looking, and the action, there's more action to come in terms of the currency. In our opinion, we're seeing 89 as the target,
wow.
and we are typically overrun. So what's actually happened is the journey's just begun. So
you see this huge consolidation between, in round numbers, 70 and 80 as being a huge range that we're threatening to break out of to take us there.
Well, we have broken out, in our opinion, already.
Okay.
So this recent events hype has led to the breakout. You can see the expansion in the volatility. This is essentially a volatility compression. It is also a continuation pattern. This is not the first time we've traded successfully on the ruble. You'll see in my charts, there's all sorts of legacy work. And I like to leave it on because we get what we call key levels of significance that become significant again. So if I just wipe the face of that overlay draw, here's where we last traded the ruble.
Yeah.
And you can see it right there. If I go, I might there you see that. And I can't remember the narrative. It was sanctions and they've done something else wrong, and the Russian seems like the naughty kid at school who's always having his wrists spanked. And then, he goes through hot spots and then he's kind of ignored for a while and mildly loathed. And then again, he's really naughty again. That seems how the Western world chooses to handle him. But there was your last break. Now, this entire move still has a macro target. So this is all a technical event.
So that was COVID back there, that move you just pointed out.
Yes. So this break that you saw breaking, that is 2020, March. Yeah. So the COVID was the beginning. Now, that's not a Russia bad really story. That was a global bad dollar strong story because of the fear trade. But it started this macro squeeze. And now you're in a winding up squeeze. So we have a macro target. You can find out what that is that comes out of this pattern all the way back there. So I just prefer to give, that's how I give meaning to the headlines. I don't focus on what's written. I go and look here and say, what are you been doing? And this has been baked in for a long time. You might remember last time we spoke that essentially I was making a case. I'm not an American. I don't try to tell you what you want to hear. I'll tell you a lot of things you might not like to hear, but I made a case for dollar relative strength. And that goes against so many gold fans. I'm an Austrian school, hard money, libertarian. You can count them all in there. But that doesn't mean the dollar against other currencies isn't going to break the financial currency system on strength rather than weakness. And I've shown all the macro charts for that, and I can do a quick run by them on the Dixon.
That's the milkshake theory.
He I think is more accurate than, say, Peter Schiff, in my opinion, in terms of how things go down. Yes, Brent Johnson of Santiago. So I think he's leaning more accurately in terms of what I'm seeing technically. I'm seeing validation for him, not dollar zero. Dollar zero against what in the currency system? The euro? Have you seen their debt to GDP? The yen? Have you seen theirs? Actually, in the ugly contest, dollar isn't the ugliest. And the key thing is Trippen's dilemma. You have the advantage, you have the advantage, you have the advantage. And it will stay until we have that Bretton Woods Mark III moment and the dollar is no longer the pricing currency. Albeit that Russia and China are now doing some bilateral trade in other things. It doesn't matter in a debt system where you continue to need more dollars externally to service the debt that is all foreign. And that is why there is a continual need, especially when you're in a compounding debt system that is falling out of control. You're likely to have a lot of people that are not going to be able, nation states that are going to have debt collapses. It's just going to lead to more dollar demand and restructuring. So that's the ruble. I pivoted away from the yields that I wanted to talk to you because I just think the chart will give everyone grounding. You need a simple line of true north. Don't get, when there's hype and news and then there's a war here and there, a lot of that can even be distraction. We have a debt problem we have a yield increasing problem, and this news flow also is very good at look at my left hand, look at my left, so that you don't see what's in my right. And so I'm almost less interested in what they're putting in front of you as the news and more interested in what they're not putting in front of you in terms of the news. So just a super quick reminder for those that maybe it's the first time they visiting that I'm on, about that dollar strength narrative that I talk about. It's easy to just illustrate fairly promptly. And it might, as I say, provoke some people. They may think, no way, dollar's going to zero. I understand that, but you've got to think against what? Against what is it going against zero? And in terms of the DXY, it's measured against the pound. It's measured against the euro. It's measured a little bit of Swissy in there that I do quite like relatively in the fiat world. In things to like. This is a macro falling wedge. So big fat blue line, just to highlight what I'm talking about. This is the dollar index since 1980. Generally, a lot of pressure across the top. This was a great period to be hating on the dollar because it was, generally
into the Plaza Accord.
Correct. All of this. And you were making marginally lower lows. They reached a point where there was always demand for dollars. As it went a tiny bit lower, you usually were due to reverse. This event was truly huge. And that was over here where you broke first upside in a brand new move. And it's our thesis that in actual fact, you are squeezing again for another upside move. So you came out of, in our view, the macro falling wedge. 3 impulses. It's absolutely the right number of impulses for us. That is how it looks. in essence. So that's the macro hypothesis. So we are dollar dominant. And you have the USD ruble, which is half the equation is dollar. And in the Dixie, you're not measuring it against the ruble. So this is not the same chart just re-put. This is dollar against first world others.
Do you think, Francis, I mean, if you're a technician and you cover up the title of this chart, that the rule for wedges are 100% retrace is possible, which would take us up to the high of the move? Is that would seem astronomical to most people? Is it possible?
Everything is potentially possible. I would put a very low probability on it. The reason for that, the sensitivities of the system to interest rate changes and big currency moves has got much, much higher. So even this, if you look at this, I'm drawing a channel with a midpoint there that I expect it to go. The move up to 110, there's going to be all sorts of things falling out of bed.
You're going to have emerging debt countries, emerging markets
getting
crushed.
Absolutely. You'll start to have the South African rand, the Brazilian real. I mean, I'm on the corner, I'm on the apex of LATAM here. I've got Colombia and, Argentina and a lot of notable names just to the south of me here. And there's all sorts of bedwetting that's going to go on if this index goes. By the way, some people say, in a few months' time, oh, he was wrong. It's quite feasible as part of this that we get to finish this third impulse. You've got one impulse, I'm drawing it in the blue. You've got a second. Yeah. You can quite feasibly go where we are. We're at a pretty high point, a leg down before you start this journey that I've drawn in orange to the upside. So the key thing is, how do I get centered in all this chaos? Go up to the biggest time frame charts. What are your primary macro biases that will still be your biases in a month's time, 6 months' time, 9 months' time? At a macro level, it's dollar strength. And that's where we're at. How do you, and always have a level that you recant that. And you say, we were wrong on that bias. Yes. And that is that point there. If we run the 89, which was what we call our low 2, so that was your low 1, and that was your low 2. The low 2 came on the 7 trillion stimulus package as a result of the events of March 2020. And since then, you've been bouncing back. So I can then slowly take everyone back into this and say, okay, let's go look at the weekly then and drop down. Where are we going to be going more shorter term? And let's see, it's still waiting to load the weekly there. Chart's a bit slow. So I've also highlighted to you this structure, which is an inverted head and shoulders for us. And on the Euro USD, it's a traditional head and shoulders, but it's basically the same chart upside down. And let me just get that up for you as well to have a small look at. Here she blows, and this is it over here. So now we're dropping out of that huge monthly chart and we're coming into a weekly. I might even make it a 3-dayer, so it's more of a half weekly. And this is our draw, and this has served me exceedingly well. We've been net long after this point. We have been biasing long, and we second guessed it coming. So that neckline, whether you want to take the neckline there or the neckline there, these are shoulders on a double.
One measures 97.5 and 199.5.
That's right, and that's the bias. Now, as I've already, and this served, particularly during this period, this served us exceedingly well. And that was the end of Bitcoin. That was Bitcoin from 69 all the way back down for people that are in other assets. That was a problem. That was the third impulse on that USD ruble. That gave us a lot. That was a surge in the lira, the first surge of the recent failing of the lira. It's had a number of failing events. And so broadly, we're expecting this to get here. Now, there's a little bit, I've drawn a little red dotted line, a little bit of a grind line there. There's nothing stopping that, having a little stab down, a consolidation and a wind up, for example. And so people could come in next week and say, oh, he's long dollar down. Remember, this is macro. If you're looking at a weekly chart, you're getting the next 6 months. You're not getting tomorrow. So if you want to see what's probably going to happen, because everybody is so immediate and wants the here and now, you're far more centered if you understand where are you generally biasing over the course of the entire year and you come down. If you want to think, how am I going to be positioned for dollar for today and tomorrow, you need to drop it down into more like the 4 hourlies the hourly's chart. So I'm on the 3-day, which is a half week. So I drop you into the daily, for example, and then we can say, yeah, there's only so much I can take from that. I'll have a look at the 4-hourly. So the 4-hourly probably looks like a little bit of base building to go up. So if you're asking what might the dollar do, I think it could mess around and even be a little bit off. We did have a hammer there, which shows there was a bid, and you have had a hammer there. So there has certainly been a little bit of bids coming in near the lows there, bid and bid. So that's typical of a bid. But you are down today. You'll see if you maybe hammer up again during the course of today, you're probably then going to have an upside continuation coming out of these two blue lines, the squeeze that I've drawn. That'll give you, a surge. I've got the square here. Let me get the line back. Something that'll take you a little bit back up to the 96s to the last time you tapped out at a high. So broadly speaking, a bit of basing and possibly working its way up. It can, of course, break down. Every squeeze doesn't have to go up. But you've also recently had quite a pushback on here. So this would be a more secular medium-term softness in the dollar. This is also an option. So there's going to be a moment of truth possibly this week where that could happen. But when I go back and I look at USD ruble, we've triggered on an upside there. So my bias generally would be, I would say 55 versus 45%, we're going to creep our way a little bit back up. However, if we run that low, it's having a more secular pullback for a slightly longer term. So that means for the next 2 or 3 weeks, you might be a little bit standoffish, a bit off, and maybe even sell off a little bit. So maybe there's some recovery for Bitcoin. Gold will continue then to be additionally strong with a bit of a tailwind. We can have a look at the gold charts for the gold bulls. Silver might follow through. We're waiting for it to follow through. The problem with the gold move so far is that it's all been driven by gold. And that tells me more likely a lot of institutional and central bank buying. They don't tend to stack of silver. It's too low value, and it takes too much space to hoard and protect. So
yeah, what backs that up, Francis, is if you look at the miners, they went for the big ones that institutions buy, like Newmont and Barrick and no silver, but all the gold miners have way outperformed everything, and it's the majors. They're not buying the miners or exploratory. So you're right, it's institutional. Can you fade these guys? Can you fade these guys?
Well, just finishing on that point, that's more the fear trade than macro assured precious metals bull. Now, I'm the first who wants a precious metals bull for me, and that can start that way. But we need to see silver, platinum, palladium, and all of those others as a groundswell all going up. And then silver as the higher beta should start overperforming. This is the gold-silver ratio, just to further highlight that, and it's going up, which is, again, just another way of saying that silver's not moving yet with gold.
Right.
And it's been going up a fair amount. So until we get a bit more groundswell, we get real confirmation of the gold bull. This could be fear for a while. Then things calm down a little bit. You could actually have the gold easing back, and then it gets a little bit put back in the box. So I wouldn't go absolutely mental and say gold bull, precious metals bull.
Could we see 1740 again to shake out everyone on this move and then put in some type of low?
We're sitting on the 19s according to what's happening today. I think it's a little bit stretched. If you weren't already in gold, I wouldn't charge in. By the way, we do have an upside draw for it, and that has triggered. So we are bullish. Let me be clear, we are bullish. It's just a question, if you weren't already in, do you get in now? I would probably allow for some correction. We see a 2057. This has triggered. So we look for a 3-impulse squeeze. This was the big squeeze. I actually speculated, could this even be down? So I was not accurate here. Whoops, that's a bit of a fat line. Let's try a smaller one. So that was your setup in the light blue that I'm just squeezing for you there. And that gives us a target. So you should have been long from 1854 at best. Stop should be at 1780. And you should be looking for 2057, which gives you a fairly decent risk reward. And you can go higher, but I would do a partial close there to lock in the bulk. So more than 50%, like a 60 to 75% close, and then leave your lottery ticket in there for a blow off or some further action, and then new fresh setups. I don't know where that would leave us, Ref, the previous high. Let's just check. What was the all-time high in 21? Let's get that number for you. It wouldn't take out the all-time high. You see, not getting geometry for the all-time high is a problem for me. Though it was 2060, not too far off, but you could get a double top then, and you could have a little bit of a pullback into the range for a while, and then you could be left twiddling your thumbs. And if you're using leverage, every day there's a cost for holding. Macro always been a bull. Gold made one of the biggest bullish cases. We can see you go possibly even double digit in our super macro mega bull case. You could drop below 10 on the gold silver ratio, which would be huge for silver. But I think that could happen post reset on a revaluation event, Bretton Woods. It doesn't mean it trades there pre-reset, the big coming together of the tent being pulled down on our heads. So that was a little on.
How far off is that with your view on the dollar? Because that's going to be a very important aspect of the reset. Some of your upside objectives in the dollar.
More FX emergings having to fail. So we need more of the USD try narrative across nations like Brazil, South Africa, and a euro collapse. We need the euro to collapse. So dollar strength, the euro-dollar relationship is very much, they are antagonistic. What's good for the dollar is naturally bad for the euro broadly. I mean, it's a simplistic explanation, but I talk about the fulcrum and the seesaw. One goes up, the other goes down broadly. Right. The euro is the closest thing to a working alternative for treasuries of multinationals as an alternative to holding dollar. So if people don't like the dollar right now, they're going to hold a euro. If you're a Apple Corp and you've got all your profits in a treasury department and you're sitting with large amounts of currencies coming in, when phones sold yen, this, you don't leave it in, the iPhone sold in South Africa on left in rands, the profits. You're going to convert it into probably dollars or euros. That's typically what happens. And when you have a grim view of the dollar, you'll be converting it to euros. If you don't like the euro, you'll be pushing it into dollar. That's why I talk about them being antagonist substitutes. Now, the euro USD, so you're asking this is all to answer the question, when do I think, how far are we towards that event? And we need the Eurozone, in my opinion, to have another failure as well. So this is not just going to be an FX emergings general failure. This is going to be a substantial economic block. And they're doing everything to ensure it happens, can I say. So the gas, even though you check natural gas's prices, it's substantially more expensive in Europe because of where you are locale. To transport gas is a hell of a thing and very expensive. So they are paying substantially more than you see the natural gas.
So this energy crisis could be the fuse.
Correct. And this USD ruble to go further up to the 90s, as we saw, the target's 89 with an overrun, means this story isn't over. You're going to be rammed with Russia, Ukraine headlines for a while. It's just going to morph into economic, more financial events. I don't think a hot war is too, I think your comments of some of the other guests are probably on, that there's not really a big, we hope anyway, rootin', tootin', shootin' and scootin' type thing. It's not the Wild West, but it's going to be a lot financial, a lot of diplomatic, waving, finger wagging, and a lot of BS basically. And
how about, could we wrap it with oil, since, that's been the main theme of our conversation?
That dovetails into the gold, why I think gold's not necessarily, I'm a bull, but you rather buy a dip, is that overall, I think that side of things about the hot war that I was just making the comment on, is likely to see this be a bit toppy and we have a bit of a drop down. And on that, it's a very good question, by the way, Dan. I want to remind everybody of 2004. There was someone saying he didn't have a good oil trading market. I didn't grab a name. I have had markets like him, which I touch and they turn to crap in my hands. But actually, oil is the opposite. I've had a little bit of a mini Midas touch, if I can, on oil. So my love is his hate. But I'm sure there's a market that he's aced that I've absolutely dumped. So there's no smart aleck in any of this. But the last time we had the Russia-Ukraine crisis, 2014, and I traveled regularly to Ukraine, we had that high. And I was like, why is the oil price, this is where we were here, and I'm pointing to it. Let me just get the marker on so that everyone can see it. I'll go with my transgender pink there. That was your high, and you got to about 109. And I'm going, we're supposed to virtually be at war. This was the first time when everyone thought that there was actually a possibility. We're now going the Crimea events. That's correct. And we were modeling a squeeze on oil, and it started to slip. And we went short. I remember them saying on CNBC, and such hedge fund, the first to be short at $93. I was like, man, those guys were $10 late. We were in on this short, and we had a target of 60, and it ended up running. Because it's the first setup in a new trade, our methodology says you can have overperformance. I closed the bulk of my position in the 60 levels, and I watched my lottery ticket almost make the same money again to the downside on overperformance to that. That's what happened in deflation and downside as a result of creating heat with a Russia-Ukraine narrative. Here, that was 2014 Crimea events. Here we find ourselves approaching the $100 mark, which our inflation numbers cannot tolerate. And we are having the exact same puppets going through the exact same routine some 8 years later. You could have a chronic deflation because technically this is a broadening structure that we've drawn up here on a big bull. So the oil market could have a real stop. So we could have a real stop in the oil market. This is why I'm saying don't wail in like an absolute chimp on gold, because if we get a little bit deflationary, and the oil gold barrels relationship has gone very strong oil right now. Gold is only just getting its pants on, and oil's already reflated immensely. Now, when we called the oil short over here, we actually had a disproportionate valuation of oil strength to gold weakness. When we called the crash of oil to single digits, that was only one half of the trade. We said go long gold, short oil. That was the full trade. It was a commodity delta
pair trade.
Yes, and the gold during that period ran from $1,300 to $2,000, and oil in that period did that. So COVID didn't set back the gold market at all. It zeroized the oil market. Then we've since had this huge reflation, and gold has been absolutely lazy as all hell and slipping from those highs, and you've had a blow-off move with oil heading to 100. And there's a lot of similarities. Don't do associative thinking. It's never identical. However, I will point out these similar values. And everyone who's been too bullish, things like Bitcoin and everything else, are saying there's a deflationary event occurring. And that brings me all the way back to the debt market that I wanted to cover. And I think we're running out of time, so stop me if you need me to shut up. But that debt market, that 10-year, those yields, and we have setups for them, and those yields are still going higher in our view. Those setups still have to perform. So if I bring you back to that US 10-year, we're on a monthly, so I'll just reduce the time frame. That's your daily. Let's go 3 daily. That is our yield expectation. Still an upside on your 10-year. This is the real story. We're in a breakout here to the upside. We're seeing through 2.1s, we expect 2.2s to run, and people will go, well, so what? You had 1.972. It is huge. The sensitivity to rates is absolutely huge. People
because of the leverage of the system.
Correct. We have loaded up on the way down so much. Again, if I just show the monthly and I go log scale, people will appreciate that this was incredible. You see how the sensitivity of the March 2020 events is so huge relative to the rest of the curve, and how this move back up is actually substantial compared to everything else. That's the log scale. Now apply an ever expanding debt pile to all of this. And that's why I say you don't need the Dixie to make 110 even, for all sorts of trouble to be breaking out, and the rest of the world complaining about the strength of the dollar and wanting a new system because their debt has got unaffordable, they can't pay it. And then the UN, Europe, embarrassed by the euro falling, all turn on America and say, your currency is too strong. You've had this executive privilege for too long. It's time we have a new system. These countries are failing. The whole world can't suffer because American currency too strong. So inflation is going to move from America, as we've warned long ago. Last time we spoke, it's going to move to Euro land. and to a degree to Britain and the rest of the FX world. And that is what's taking place. And these yields are going to help drive that. And that high oil price, for as long as it's there, is going to help drive it. And the only way they take that inflation genie a little bit back down is they pump the oil price into that war narrative, and then it deflates down. So just a little bit of a scenario for you.
Yeah, and the Fed in the mix. I'll tell you what, Francis, it's a great interview. I don't know. I think that Panama agrees with you, and you know, excellent. You know, I found myself being the audience listening to you, and really appreciate your work. And the best way for people to follow you, I know everyone, Francis's Twitter handles @TheMarketSniper.
It's also the YouTube channel. Yeah, go to the YouTube channel and the website, themarketsniper.com. If you're interested. Yeah.
Well, enjoy your vacation, semi-business and vacation. I bet the beaches are beautiful today, and really appreciate your work, Francis. You're one of my favorite guys to have in the rotation now.
Great. Yeah. Thank you so much for having me. Trade safe out there, friends. Don't get caught up in the headlines. Just look at those macro charts. Let them be your compass.
And yes, these are recorded. We had some questions. You could go back and review this because there were enough pearls to string a necklace by Francis Hunt today. And the U.S. being, you know, the dollar, call it a deck of cards built on sand, with rates being the rug being pulled out on it. So really appreciate it, Francis. Talk to you soon.
Thank you very much, guys. And have a great day trading today.
All right, buddy. Francis Hunt, everyone. Thank you. And remember, everyone, don't just count your pips, count your blessings. And you too could live large
recording
like
stopped.
Francis. And
recording in progress.
And I'll see everyone tomorrow. You could join the team.